Massive Bitcoin bull run ahead? Two chart patterns mirror BTC's rally to $109,000. Key bearish indicators recently trapped bears on the wrong side of the market in a pattern observed in August-September 2024. This is a daily technical analysis by CoinDesk analyst and chartered market technician Omkar Godbole. Crypto bears might want to closely watch Bitcoin's BTC recent chart patterns, which mirror those that preceded the late 2024 rally from $70,000 to $109,000. The first pattern involves the weekly chart's Moving Average Convergence Divergence (MACD) histogram, a momentum indicator used to identify trend changes and reversals. MACD crossovers above or below the zero line typically signal bullish or bearish shifts in momentum. However, traders interpret these signals in context with price action. A bearish crossover, for example, needs validation through weakening prices, otherwise it could indicate underlying strength and a bear trap. Currently, that seems to be the case in BTC. The cryptocurrency initially fell after the MACD flipped negative in mid-February but quickly found support at the 50-week simple moving average SMA in March and has since bounced back above $90,000. All the while, the MACD has held below zero. This pattern is reminiscent of last August and September when prices held the SMA support amid persistent bearish MACD signals. The indicator flipped bullish around mid-October, confirming the trend with a rally from $70,000 to $100,000 by December. The second pattern involves the 50 and 200-day SMAs. About 4 weeks ago, these averages formed a bearish crossover, commonly known as the death cross, signaling a potential long-term downtrend. However, this turned out to be a bear trap, with Bitcoin finding support around $75,000 and reversing course. Recently, the 50-day SMA has begun to rise again and could soon cross above the 200-day SMA, setting up a bullish golden cross in the coming weeks. This pattern closely mirrors last year's trend. The death cross in August marked a bottom, quickly followed by a golden cross that sparked a breakout above $70,000 and ultimately led to a rally above $109,000 to new highs. In other words, bullish volatility could be on the horizon, potentially taking Bitcoin well past the January high of $109,000. Chart patterns are commonly used to assess market strength and forecast future movements. However, it's important to remember that history doesn't always repeat itself, and macroeconomic factors can rapidly swing market directions, making chart analysis far from foolproof. Omkar Godbole is a co-managing editor on CoinDesk's markets team based in Mumbai, holds a master's degree in finance and a chartered market technician (CMT) member. Omkar previously worked at FX Street, writing research on currency markets and as fundamental analyst at currency and commodities desk at Mumbai-based brokerage houses. Omkar holds small amounts of Bitcoin, Ether, BitTorrent, Tron and DOT.